Welcome to StockMarketPending.com. The reason why we're showing you this instead of the logo that we normally use is because for some reason the flash is not working. But once again, welcome everyone. Click on the free 5-day trial sign up. We're going to be talking a lot about today with our trading staff, bear and bull ETFs, but more importantly is we're going to take a look at key Pacific indexes on the monthly charts today. And basically what we're going to do is road map these trades that we will be doing. And we will start with this right here. We're going to do the NYSE Composite Index on the monthly chart. And there are various others that we will go through because we want to get a broader view of the SMF risk management profile. And in order to do that, SMF Street Traders, is that we have to go through these so that you'll know what indexes to be long, what indexes to be short using options if they're available. The cross current is going to be what ETFs are related. And what that means is that this is just a world ETFs. These are ETFs that we are putting together as far as worldwide ETFs. However, we will go into the bear and bull ETFs that are associated with these indexes. So this morning we're going to cover one of the most important ones there is, and that's the NYSE. And right here, and once again, folks, the NYSE was up 129.65 on Friday. Low volume, short cover rally. Why is the NYSE important? Why is it different than the NASDAQ or the Amex? And why is it so important? I can tell you why. SMF Street Traders is that you have old economy stocks in there, but a lot of your program trading occurs on the NYSE. Institutional program trading, you have other kinds of those things that are done there, and big money is making big transactions, and a lot of those NYSE stocks, composite index, and it's nice to know where you're at and why you're where the trends were. So let's talk about that. The trend started over here on 3/1 of 09 as we understand it. And the NYSE broke out all the way right up there to its highs at 77.21. That was a 3,000 point rally in those names. And unlike the Dow and other indexes we're going to look at, is they're going to have, all of them are going to have a similar monthly reversal patterns within a lot of these indexes. One starts right here. There's your 3-month reversal. So that monthly reversal started 4/1, carried through 5, carried all the way down here where it made prices here on months 6 and 7 of year 2010. And by the way, just so everyone knows, these indexes have something that's very close to each other. And the key to what we're going to be talking about is those reversals. Those reversals. And why is the NYSE very important? It's important for one reason. Because if there's the bulk of sellers or buyers, you're going to see it here. And the NYSE advanced decline line is going to be important as well. And here's the reversal, and here's how it goes. This is year 2010, January as we started. But notice that we have that 3-month pop up to the highs, 3-month reversal, and here it is. Once again, there's that culprit from that reversal. On this monthly NYSE chart, if I cannot close above that trend line, and I'm below the 10-month moving average as at resistance, the 20-month is curving right up here. That's the red line. And the 200-month remains down here. Now, if we were to have lower growth, one of two things can happen in all of these indexes. And let me make sure that people understand it. Is that to get a yield, hedge fund managers are looking for yields. And so are other people involved in Wall Street looking for a yield. So basically, with the very low interest rates that we have, do they get more? So to get money back into the NYSE is, do you get a better yield on a lot of stocks in the NYSE versus having your money in a money market fund that's almost giving, well, let's say gives you nothing. So basically, you know, one of the things that could happen is money could return based just on that. But that doesn't mean that people, one of the things that we're going to monitor is, are people buying because they feel that the markets can really go higher? Or is every dead cat bounce like this right here going to sell off again or not? And we're going to be measuring in September, because the dog days of August are over. So in September, we're going to be monitoring that buy side, sell side volume. We're going to be monitoring what goes on in this index. It's very important. And it's a monthly bearish reversal, kind of like with the Dow and the S&P, as you all know. So the thing about it is, we're going to see exactly when the bigger volumes return is what happens at this key resistance level moving forward. So one of the things that we want to be mindful of is, we did have the double bottom price action. That's your 7th month right here, the month of July. Then this very light volume month of August has been more in a distribution mode at resistance at the SMF qualifier. So basically, there's a lot of problems. And another thing that's very important to know is that this line right here is called a 100-month moving average. So that 100-month moving average is much more powerful resistance than the 10-month. And the key elements will be as follows. The month of September, we're going to be looking at, on a weekly level, we'll use the daily and the weeklies, but we're going to take a look and see if the July low volume little summer rally that we said was weak and was over, is that the September give a much bigger distribution monthly bar like this month here. And this month was 5-1. That was the big engulfing monthly bar down with the double bottom price action here and a very light August month here. So basically, we're going to see if this lower end at 64.68, which is currently your 20-month moving average. But let's make sure exactly what the 20-month moving average is by looking down here. The 20-month moving average just so happens to be 64.55. The closing price on Friday was 67.94.91 plus 129.65. Low volume short cover. I will have the SMF Street traders take the numbers down now, and then you'll know in the video where to look when you're reviewing it. So your number here is 64.55 on the 20-month. The 10-month moving average at its current closing month so far, below that, happens to be at 7010.34. That's very key. The other thing that SMF Street traders need to be aware of is that the MACD, which is the blue bar, is still in a monthly sell signal. What you'll be looking for, and what we will be looking for confirmation, is a bigger drop in the monthly MACD, meaning that this number down here, it's at 175.49. And what does that mean? That means that as the number goes lower, the trend is also weaker, and the key resistances remain the 100-month moving average and the 10-month moving average. More importantly, let's recap it and close the video, is we're going to be monitoring half of the bar. That's the SMF Pro Monthly Price Action Bar. And we have a mathematical trend within, whether it's a 3-minute bar, 15, 60, daily, weekly, or monthly, it is all the same, SMF Street Traders. Trends that are below half of the bar are weak trends, meaning that the bounces are going to sell in resistance. And if you cannot close back up above half of that SMF Pro Street bar, well, guess what? That means that the shorts are there. And that's the side of the market. And once again, like I said, there are index put options that can be done on all of these indexes you see here. We're going to be going through the transportation index later. We're going to go through quite a few of them. And I will tell you, SMF Street Traders, that when you're watching the video, the other key part is this support level right here. That's the July up bar. And so far we've come down and we've tested it, and you can see how we bounced off of it. What we're looking for is a closing monthly bar below half of that bar that serves as resistance and a sell through the 20-month moving average. And let us not forget, I'm going to put you in touch, SMF Street Traders, with the 200-month moving average. And that is 6116.72. And that's right there. So, you know, that's a 600-point haircut down here to test that, as we could possibly do in September and October. So we are very mindful of what kind of put options that we will be buying to ring the cash register, and making sure that SMF Street Traders are enjoying the sell-off. If we get a nice good sell down, what we are looking at is a break below half of that bar. Welcome to the NYSE monthly chart.